It's happening. Bitcoin and the broader markets are both on the verge of testing all-time highs, with Bitcoin just 1.3% away and the S&P 500 just over 2% away from that mark. So this is all happening as we approach that traditionally quiet summer period. So is the rally going to sustain, or is it going to peter out into a bit more chop? Well, with performance of global equities, money supply increasing, efficiency gains via AI, that all has me thinking that the summer may not be quite so dull after all. Also, we're seeing some key sector rotation that we need to talk about, so join me as we look at the key charts for stocks, commodities, and crypto. Let's go. This isn't financial advice. Past results are not indicative of future performance. Do your own research. Welcome back to the Trading Apologist. My name is Tom, and I know what you guys are thinking. Did you get a whole lot more interesting, or is that background just way more boring? Well, yeah, unfortunately, it's a more boring background, but where we're at here for the summer for the next couple months, it's the best setup I could find, so you're going to have to deal with it, but I'm going to supplement the boring background with a ton of alpha. So the main story today is that Bitcoin and the broader indices are both looking like they want to test all-time highs sooner rather than later. I mentioned in Friday's video that with Bitcoin closing strongly above that key $103,700 level, there was a good chance that our local bottom was in, both based on that and our prior time analysis, which was pointing to a 2-week correction being the most probable. Then, after today's breakout from downtrending resistance, I posted on X about the next 111K target, which we just tagged this afternoon. Sometimes all these squiggly lines on the charts, they actually work. So this isn't about patting myself on the back. My goal with these videos is to help you guys develop the ability to spot and act on these setups yourself, not just follow someone else's lead. That shift, if you can make it in your trading, is the most empowering step you can take to really develop and grow in your trading journey. The other point to bringing this up is to be selective about whom you follow online. Yes, no one can predict the future, but with solid analysis, you can reach a 70 to 80% hit rate. And if someone is consistently wrong or dogmatically bullish or bearish, please stop following them. Anyone you follow online, see what they say and backtest it to make sure that what they're telling you is accurate, because you don't want to cloud your judgment or your analysis of a stock. There's too much noise out there, so guard your inputs. Anyway, that's enough of my soapbox. Let's look at why this rally might keep running and why the traditional summer slump may not stick in 2025. First, global equities have been decisively outperforming US equities this year, even with the recent bounce in the US market. Now, I see traders rotating into international names, but honestly, that trade was for January or February, not June. This kind of US underperformance tends to be short-lived outside of 2 longer cycles in the late 80s and around the dot-com era. Global outperformance usually reverts within a quarter or two, and then we see US equities outperform again, and we're entering that time period right now. There's another tailwind too. We're currently seeing 2 of the 3 biggest long-term drivers for equity gains. Stocks tend to drift upwards over time, and these are the 3 high-level reasons. The first is population growth. With a higher population, there's more output and more consumption. The second is expansion of global M2, and we know that more capital needs to find a home. We've seen a lot of M2 growth this year. And then 3 is higher efficiency, which leads to stronger profit margins for companies. The first isn't doing much in the US right now. Population growth is slowing, but the other 2 are in full swing. Global M2 is rising, as we've seen in recent charts, and companies are widening margins through AI-driven efficiency. The last point matters. Companies are getting more done with less labor thanks to AI, and labor is any company's highest input cost. The associated job losses are a tough challenge for the workforce and the economy, but we need to remember that markets aren't the economy. While AI-driven job displacement is a societal issue that we definitely need to address, it doesn't negate what it means for margins or equity prices. So pick wisely as to where you invest, as outperformance now, it may well help protect you against an uncertain future for many careers. So with that backdrop going into all-time highs, let's look at Forex Factory and then get right into the charts. We have CPI this Wednesday, which is the biggest thing that could move markets, PPI and unemployment claims on Thursday, and preliminary consumer sentiment on Friday. So let's open up the charts, and we're going to start on the S&P 500. Okay, starting here on the S&P 500, and we had our second day in a row closing back above 6,000. You can see we are still into this previous area of resistance from this last all-time high consolidation range, which is this chunk of price action right in here. And so we need to break through that to really test all-time highs. I would say that if we're looking at the chart, we are a little bit overheated on mean reversion, and on the daily RSI, we already broke that uptrend, but that doesn't mean we're going to drop down right away. This can chop around at the top part of the range for a while, but if we start seeing price climb up, and even if we break into all-time highs and our RSI starts drifting downwards, that's a bearish divergence, and that just tells you that things are going to cool off and a bit of a correction is coming. So there is strength in the market right now, but a bit of healthy correction or even some chopping around, even if we just start doing some of this and drift higher, that would do a lot to reset the charts. If we look at the NASDAQ is in a very similar position where we are very near all-time highs. We're actually closer than we are on the S&P 500, but we are also quite overheated here on mean reversion, and our RSI is at the top of the range. The RSI, it can get more overbought than this, but just something to watch out for if we start seeing cooling in this, particularly if we see that bearish divergence that I called out on the S&P 500, that would be a sign that we may have a little bit of a correction incoming, which again, isn't a bad thing. We can't go up in a straight line. This clip that we had here wasn't sustainable. This almost looks to me on both charts like a bit of a bull flag right now, but with some of the indicators a bit elevated, I'm just wondering how much it can do if it breaks through, unless that's some really bullish news like some rate cuts incoming that weren't expected, or maybe Jerome Powell is out and someone else is in. Any of those things could really, move the market and push this up a lot higher than the indicators are pointing towards right now. If we go over to SMH, you can see that the semiconductor market was much stronger today, breaking out. It did pull back off of its highs a little bit in the latter half of the day, but you can see on this RSI, we had this uptrend that we broke down from, and then we had some downtrending resistance that we broke back up from. So you can just see how this works to give you a lead on the market. If you look at that breakout right there, that corresponds with this time period right here. So it would have helped you get in that little bit of a rally there. And if we look at TSM, very similar chart here, very similar pattern on the RSI, but also overheated. And NVDA too, similar chart, but has been cooling off a little bit and not quite moving up at the same clip as the rest of the names. This 140 level for NVIDIA is definitely a key zone. You can see we've printed a fair amount of tops right around 140. And of course, if we can break through this, our next test is the all-time high at $153. But with how overheated the charts are right now on this and the semiconductor space, if we get up there, I just don't know how much strength we would have, barring a big news event like I just mentioned, to really push through this in a meaningful way. It seems like it would almost be healthier if the charts could have a little bit of a correction and regain some strength before trying to test those all-time high prices. Okay, moving on to gold, which has honestly not been doing much. It broke up above our downtrending resistance, but now has just been kind of riding the trend line down. But the real story, while gold is consolidating, has been silver. And last week we talked about previous all-time highs and breaking out from those. And late last week, I got into a position on silver as we were breaking out from that in a 2x leverage silver ETF. And that has not been bad so far. And we know that silver normally moves after gold. So the charts are looking a bit overheated. We have to see how much room it has in the tank to run. I could imagine getting close to that $40 level and then maybe consolidating for a while and then later on breaking out to try to tag that $45 level, because like we said with all our other charts, nothing moves up in a straight line. Okay, moving on to Bitcoin, and you can see we just had our second highest ever daily candle close. And I want to go over to the 4-hour chart to talk about these breakouts and how we knew a more explosive move was coming. Well, for 2 weeks, we've been in a downtrend, and we had this larger downtrending resistance, this top line, and this smaller downtrending resistance here. And we already broke this downtrending resistance a couple of days ago after that Thursday recovery. So that was a first sign of strength to me that Bitcoin was potentially recovering and that this was a local bottom. Right around here, we had our daily candle close above that 103,700 number. And we got that. We rejected from this trend line one more time, tested the most trade zone, and then we broke through. So that was the sign of strength for me, that was most likely our local bottom, and that our 2-week time analysis from the all-time high was playing out. And you can see how that was 14 days right there. And when you have 2 weeks of downtrending resistance, you can anticipate a move to be a bit more explosive. And in my post, I was actually targeting this level that we're at right here, where we're finding support now, the 109,500 as a near-term target. And I got that by doing 100% extension from the 50% level here. And we actually moved through that rather quickly, got close to the $111,000 target, and now we're back testing it for support. So I would anticipate after Bitcoin consolidates a little bit that this move will most likely continue. The other bearish target that the bounce last week invalidated was that there was a bit of a head and shoulders pattern forming right here on Bitcoin. And when we broke down from that, there was concern that the price target from this was actually right around $93,000. So way down here, just below the 200-day SMA. But since this looked more like deviation with that quick bounce and close back above, that invalidated this pattern for me. Technically, the pattern's still valid until we break all-time highs and get above the high of the head there. But for all intents and purposes, I wouldn't consider this really in play anymore. But what would be good to see now is not just a push straight through to all-time highs, because you can see how elevated we are, particularly on the 4-hour chart. If we go over to the daily time frame does definitely have a bit more room to run here on both mean reversion and the RSI. So that's why I'm saying I'm thinking we're going higher. But just considering the 4-hour time frame here, if we could chop around and consolidate for a day or two to let some of these metrics cool off and then attack all-time high prices, that would be great. So, in an ideal world later this week, we see a move on all-time highs for Bitcoin. If we go over to Solana, I'm just on the daily here. The one good thing about this correction here is that we bounced off exactly from the 50% level here, which is at 141,000 and change. And that's the 50% from our correction bottom in April to our local high at 187, 188, and also closing above this key $150 level on the daily. Those are both good signs of strength for Solana, but Solana, I don't know if it's market maker manipulation or whatever else you want to call it, but the chart is still very weak in comparison to Bitcoin. I mean, Bitcoin at all-time highs and us way below the 50% of all-time highs. The 195,000 here is the 50% from our all-time high, and we're not even close to this $187 high. So if we're comparing Bitcoin and Solana for relative strength, the relative strength, despite all the adoption of Solana and all the usage and all the fees and the revenue it generates, the strength is definitely still in Bitcoin. If we are going to look at a stronger altcoin than Solana, I do have to bring up Fartcoin, which I know everybody chuckles at. We're still not at all-time highs, but when we look at this overall move up and correction, we also got to the 50% level here at about 91 cents. We just wicked below it on one candle there, and then we've bounced away strongly. We put in over 20% just today. And so you can see just by the moves, and I always talk about this being so great for trading, and it's much better for perp trading than Solana because it just really respects these levels. And what I wanted to show you guys, let me just turn off the optimized trend. Okay, what I wanted to show you guys, if we just zoom in here, if we go back to May 23rd here, and we've been in this downtrend, and you just draw in a trend line like this that keeps acting as resistance, 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 and we break through and then we backtest it for support. Whenever a resistance line like this breaks, it's normally going to be a more explosive move away. And we saw just that today as we moved up, well, this is last night, 28%. So if you know a little bit of TA and what to look out for on the chart for a break like that, the gains, particularly if you're playing leverage perps, can be great in a coin like this. And we have next resistance overhead at $1.29 or $1.29.5. And what it also does, if we get in even closer, say on the 30-minute time frame, it just is very mechanical in how it respects these uptrends. See how I have this line drawn here and I have an alert on it. And my alert is to notify me that, hey, it might be time to go short on Fartcoin as soon as it breaks through this uptrend. Anyway, I'm going to get into this one more in the future just to get into the mechanics of it and what to look out for, but it can be a great one to perp trade, and it's less manipulated than some of the bigger altcoins out there. Okay, let's get over to MicroStrategy. You can see we're still consolidating and finding a bit of resistance around that $390 level where we had this previous peak, although we did break through it just a little bit today and then retraced into the end of the day. We are up a little bit after hours. You can see this daily RSI. While it did break the uptrend twice, it is now strongly breaking away. And I suspect that with Bitcoin near all-time highs, that MicroStrategy is going to move along with that, particularly if it breaks out. I'm wondering if Michael Saylor is starting to hit the ATM again, because I would imagine there should be more strength in this chart if Bitcoin is starting to run. It usually, at least on this rally right here, has moved ahead of Bitcoin. And it hasn't been moving right now. I would have anticipated that MicroStrategy would have maybe already broken into that $430 to $440 price range, but it seems to just be lagging a little bit at the moment, which would indicate that perhaps Saylor is hitting the ATM. Okay, if we go over to Tesla, and I'm just on the 4 hours so we can see the after hours price action that got us almost up to $316. So we had that fear bottom on Thursday of last week, and we bounced away quite strongly from that. We tested the 200 EMA for resistance once and now broke through. And this was on Trump saying that he's not going to sell his Tesla after all. So it sounds like he and Elon may be patching things up. I don't think they're going to be BFFs again, but Elon deleted some of his tweets today about a recession happening later this year because of tariffs. And, there's some calm coming over that whole situation. The notable thing here, and why I mentioned on Thursday that I was buying, was two things. On the daily, we had our highest volume candle ever on the daily. And also we were into this very strong support here at $270. We didn't quite get there, but you can see how these past areas where price tends to bounce continued to play support at a little higher level, which is actually a great sign of strength, especially considering all the panic that was in the market. So I would anticipate that this move back up would continue. This was a bit of an artificial drop, if we can call it that, but we do have to get now back above that $322, $325 range. You can see how we had a little bit of trouble with that last time. And then obviously that $367 where we found our last tops right there would be the next zone overhead. But it seems that strength is coming back into Tesla, and on the daily RSI, it's got lots of room to run. And as that relates to the pair trade, if we go over here really quickly, you can see that this is starting to shift in the favor of Tesla with a move to the downside. The trend hasn't shifted yet, so I would always wait for that trend to flip for extra confirmation, because as we talked about the last couple of weeks, with this move here, there was a bit of a fake out where you had to trade twice at about the same level, and it wasn't the most efficient trade. While the momentum is definitely shifting in the favor of Tesla, I'm still waiting for the RSI right here to cross that 38 level, which normally corresponds with a trend flip. And speaking of the trend flip, let me just go to the trend model really quickly to the settings. I mentioned this on Friday, but I like to change the tightness to loose or very loose. You can see if we just go to tight, how there will be more variation in the trend flips, and you'll see little orange patches here and here that may throw you off, or you even got a small little orange patch here. It won't be as precise. On tight, you can see we're already orange here right now, but if we go back to the settings and we change this to very loose, what I had it on, you can see how that just smooths out the noise here. And so now this stays blue the entire time. You don't get any orange right here in this zone. So it gives you just a little bit more of a clear signal to act on. And if you don't want to get into the RSI analysis or anything else with mean reversion, you can just use this as a very basic indicator of when to flip from one asset to another. So MicroStrategy to Tesla, Tesla to MicroStrategy, not the efficient trade, right? MicroStrategy to Tesla, Tesla to MicroStrategy, going back in time, Tesla to MicroStrategy, MicroStrategy to Tesla, Tesla to MicroStrategy. And you can see how you're not nailing the exact top or the exact bottom, but you're getting pretty darn close with this trend flip, and it's proven to be very accurate over time and is the most simple way of approaching the pair trade chart. Okay, moving over to Hood, and I'm starting on the 15-minute just so we can see this after hours price action. Look at this crazy candle after hours on Hood. So we started dropping into the close, and then we whipped down, up, way down, and then consolidated a little bit, one more drop, and then bounced away today in the overnight hours and during our normal trading during the day. And this is very unusual action at the top. And the reason this gave me a bit of pause was because on Thursday here on this candle, we saw our biggest ever dark pool transaction, which at the top I thought is most likely a sell and some profit taking, and then followed by this funky action on Friday with thankfully some recovery today. Well, all of that was due to rumored inclusion in the S&P 500, and then it came out on Friday later in the day that the S&P 500 is actually not reconfiguring right now to include Hood. So that led to that sell-off, but we had a strong bounce away. Our target for this move and breakout into all-time highs is still that $83. And this trend line here, this yellow trend line, is just a price and time projection that was taken from these prior moves up right here and this move up right here. So ideally, as we're accelerating into the final wave of a 5-wave structure, it would outpace the speed of the previous moves. So ideally, we're looking for Hood to get to those all-time highs by this Friday right here to beat that time target. If it starts lingering underneath this and petering out a little bit, that would be our first sign of weakness in the move. And you can see we're obviously overheated on RSI, and some kind of petering out price action like this is a sign to us that maybe we aren't going to hit the price target all the way and we're running out of steam a little bit. So it might be worthwhile taking some off the top to see where a correction eventually gets us for a better reentry. And as I mentioned on Friday, I'm only doing that with a portion of my portfolio because I believe in Hood's growth potential over the next few years, and I want to continue to hold a position. So I'm just swing trading part of my position on Hood. Okay, moving on to Celsius, and this chart continues to show strength. We are just testing the last bit of resistance right here. You can see these previous highs right here at $42 and change, and we broke just above it today, but weren't able to close above in that range. And if we're able to get to this, we've got a little bit of previous price action in that $44 to $48 range, but I would anticipate the next major resistance being right here at $52, and then ultimately our 50% level and the price target where we want to exit, which is at $60, which I always like to front run these targets a little bit because everybody's looking at that 50% level. So maybe I start taking profits around 58.5 to 59, or you could be layering out on the way up, depending whatever works for your strategy. But still a lot of strength in this chart, and we're looking for this move to continue. And the breakout from this zone, I imagine, would be a bit more impulsive. We, definitely had a lot of consolidation here, even though we were drifting slightly upward during all of it. I would anticipate a few more moves that mirror something like this, which we've obviously been doing right now. So perhaps we go up and we test these levels, and then we consolidate in this range a little bit more, and then eventually we break out to hit that target. Of course, it's not going to be this perfect, but just to give ourselves a rough roadmap of what to potentially anticipate. Okay, bringing up one more chart, which is SMLR, which we haven't been in for a while. We've been getting into SMCI, but they had news in a K1 filing today about a lawsuit from the DOJ and settlement coming likely in Q3 2025. It's a class action filing with formal complaints about their interaction between their Bitcoin price and volatility and a possible legal settlement and some other disclosures that were not properly formed. Anyway, you can chat GPT it if you want to get more of the details. But Someone obviously knew something because this price was already drifting downwards, and then we found support in this previous support box the last couple of days, and it broke down this morning when this K1 filing came out. And as soon as we got to the bottom of this range, I actually opened a position because it aligns with this previous support from the fall of 2024, how that was resistance and support. You can see how it was also resistance back here. So it's a very strong level. And what I like about this is it gives us a clear invalidation. So I got in at about $29.50. I didn't nail the bottom on the pullback. And we've already bounced away to $31. And now I can move up my stop loss. It can be a risk-free trade. But these kinds of lawsuits that come around, like we saw with the trade desk earlier this year, the impact doesn't seem to be long lasting. So just got in this for a bounce play, and it could be one to add to your watch list to see if there's another potential good entry. The last thing I wanted to just mention to keep on your radar in terms of rotation and relative strength, while the Bitcoin treasuries have been somewhat weak over the last few days, there was relative strength coming into the Bitcoin miners. So Mara, Bitdeer, Iron, others, and you can just see this by the volume analysis, or if you take an aggregate for the miners like the ETF or Riot, say, as a big player in the space, and divide that chart by one of the Bitcoin treasury plays, that can also give you a feel for relative strength. A lot of them are moving into the 200-day moving average, as we can see here on Mara, and you can see that on CleanSpark too. If you go over to Iron, it's already well above the 200-day moving average, and Bitdeer is showing quite a bit of strength, retesting that for support and bouncing away. So I mentioned that just to keep the Bitcoin miners on your radar. They have definitely been lagging, but it seems like there's a bit of rotation happening, and there could be some opportunities here. But again, don't marry these. If there is a little bit of a pump, ride the wave and get back out. All right, so that's it for the charts, man. There is so much more that I want to cover on Palantir, MU, natural gas, or a few other names, all the Bitcoin treasury plays. I've really been wanting to compare those, do a relative strength analysis of all those charts, but it's already well past 10 p.m. here, and I am absolutely fried from moving this weekend. I'm sorry if my energy was a little bit low today, but if we don't have any crazy big news stories this week that we need to cover on Friday, I think it would be really worthwhile to just spend more time in the charts and go over each of them in a bit more detail, as we're getting close to all-time highs on some of these names. Some already are in all-time highs, as we covered. We're going to need to do more price projections, see where there may be potential pullbacks and areas for corrections where we may want to rotate out of some names temporarily. So lots to discuss then. I hope that was helpful. If you guys have any chart requests or other things you'd like to see on Friday, please leave those in the comments down below, and I look forward to seeing you then. Bye for now.